Thank you, Mr. Damir. Leko. We have reached the last panel for today on the topic of Financial Services Booster, which will be an introduction to the field of financial services and ways in which these services accelerate the growth of digital commerce. The moderator is Zoran Vasiljev, Group CEO at Centili. The speakers are Gabriel Ghita, Nikola Mehandžić, Damir Leko, Nemanja Nikolić, and Bujaki Gabor Shandor. Where are you? Okay, you are. Okay.
Thank you.
One applause.
Thank you, guys. So while we wait for everybody to come on the stage, let me quickly set the stage for the panel number 4. Welcome everyone. Thank you for coming. My role today will be to keep you awake, to change the energy a little bit, we discussed this a little bit in preparation earlier. The success of today's panel will be if nobody's scrolling Instagram by the end of the session, but actually involved with us and actually communicating. So it's a great session because we have a mix of people from a financial services ecosystem. The headline of the session is Financial Services Booster, but we will cover several topics and obviously mix it up between the guys. I'm not going to introduce them individually. I hope you actually read their bios on the website, on the speaker. Introduction is not, do this after, but there's a mix of bankers, obviously Mastercard as a general sponsor and somebody in a leading space when it comes to cards, acquiring company, fintech disruptors. So real good mix for us to cover several topics. One is related to everything that's happening in the financial services sector, what and how the sector can be more efficient, how it can be more convenient, as what we just heard, in order to generate more digital commerce, and what's the future of digital commerce and what's the role of fintech within that. The second topic is related to shopping cart abandonment, but that's just one small part of the conversation related to customer experience, to what are we in the ecosystem doing better or worse in order to stimulate different customer experience and increase throughput, consumptions, and everything else. And it is not related to crisis or COVID or wars, but actually to changing behaviors and everything else, correct? We will also talk about a little bit of disruption. Are there winners and losers between banks, digital banks, fintechs, and everybody else that wants to have a piece of that pie? And then also probably we'll talk about something that you have in mind. The whole idea is not for us to preach from the stage, but actually get you involved and maybe share some of your experiences in utilizing financial services or expectations you might have as you consume some of the financial services or anything else that is happening in commerce. So with that, I'll take a seat now and maybe kick it off with the first topic. In a world that's today dominated by improved and better digital experiences, where we are expecting instant gratification, where we are hoping to have one-on-one personal recognition by our brands, by our banks, by our telcos, by our e-commerce providers, etc., etc. Is there a role in the financial services sector and in a company serving this to actually get more efficient, get more convenient, as what Damir just mentioned, in order to actually stimulate larger GTMs, GVMs? Is it also their role for us or lessons that we have learned in a process of what we did wrong before and that now we're actually doing better? So maybe we can start with Gabriel from Mastercard, and then maybe also talk to Nikola after this.
Sure, thank you. I think the answer is yes. So there are many things that can be done better. I wouldn't say that they were done wrong before, right? Because ultimately, payments, just like anything else, they grow and they develop with scale, right? So the more you have, the better you become. A few years ago, the e-commerce was almost nothing in many of our countries, right? So it's not like we were doing this for like 100 years and all of a sudden we realized that we did it wrong. But then the things that can be done better are quite complicated, and there are a lot of them. And they start from the merchants themselves, right? There are stats saying that 1 to 5% of the digital stores visitors become purchasers, buyers, right? So 1 to 5%. Now, clearly, you wouldn't expect that all of them become buyers, but still 1 to 5 looks like,
very low.
Yeah, it's very, very low. Then you are having in Damir's slides that half of the initiated purchases were lost in Germany, right? Because of things that were not going well, right? Whether they were related to too much data needed or the website or the mobile app not. By the way, there's a big difference between mobile apps and websites when it comes to accessibility, right? So there's a lot of things to be done there, which is like the basics, right? And then from there you move upwards, and that also takes into account the payment piece. And obviously there are many things that can be done better in the payment piece. I think that the industry is slowly waking up. It's still probably too slow, but the industry is waking up. Coming from an EU perspective, we have this strong customer authentication, which is a big disruptor and a huge opportunity for everybody. Although the basics would say that the process becomes worse, but in reality, because people are woken up, they start doing things better. But it's going to take probably a bit longer than what we wanted. I think that's a good kickoff, and maybe I'll pass it to Gabriel very quickly, just to hear from a bank itself. Did we become better of understanding the importance of partnering also with third parties in actually to building up the capabilities to answer some of these challenges? Or are we still, behaving like what in old telco world we did, old elephant, we can do ourselves, we won't be disrupted, and then a train hits us. So, maybe from a banking angle, if you can share some of your insights, and then we come to Nikola.
Yes, sure. We are coming from Budapest. OTP Group is leading group in Hungary. That's why I'm telling this, because we're struggling the wide range of challenges. Because on one country we are market leader, and other countries we are building up markets. And clearly visible that our position in the Hungarian market is brought up by selling physical POS terminals. And it was a clearing, acquiring position for us, but internationally and mainly for the future, we really need to focus on the connections of fintech and not just dealing with terminal management and other solutions. So we are really open to build up this type of new relationships, mainly in the international markets, as we try to develop ourselves.
Very good. And
also, just one more added, it was a very interesting number, what was Damir mentioned, that was this 20% that you mentioned, that we are working on the other side on this 20%. What I want to tell for this percentage, that we try to seek the added value of the acquiring service, because there are a lot of acquirers on the market. What the difference between them is, what are the biggest added value that they can provide on the market. And we are seeking continuously how can we be different on the market and not just providing a service. And that's why we really need to focus on the other partners on the market, and we try to be on the best on the acquiring side, but clearly visible that we need to do the partnerships and need to rethink our working structure.
Great. Nikola, somebody from a payments
so
angle.
Let me add something on what Gabriel said, and I completely agree with his thoughts. I would just like to add one more thing, and Damir spoke about convenience, how important it is. And today we spoke a lot about consumer payments. But I will tell you that good experience, convenience, it extends to all sorts of payments. So today we have a situation where small and medium-sized businesses, they want to make international payments in the same way as they are paying in the stores. So they want to do it with one click to complete everything in 30 seconds. So really, you know, all kind of payments should be more convenient, should be faster, and of course should be more secure.
Great. And now moving into the topic that was mentioned in a presentation, and I addressed it to Nemanja and Damir also while we had the stats from the previous presentation, is this whole concept of shopping cart abandonment in digital commerce. And this is just one of the syndromes, obviously, we have seen, and you explained it quite well, of what is that experience used to be, and the stats that are behind it, of people really, you know, these are people that actually had a real intention of spending money. So this is not an experiment. This is somebody who really had an intention of spending money, and at the last step or at the 2 steps before abandoned the process. And there's probably multiple reasons, and maybe, you know, you guys can share some of your experiences of what they are and how they have changed, and why are these numbers maybe dropping year after year. But besides shopping cart abandonment also, are there other customer experience and experience touch points in a process of digital commerce that you see trending and that will actually improve the overall volume and obviously satisfaction? Because we as consumers have high expectations. We, you know, our behaviors also change on you know, more frequently than before.
Yeah, exactly. Increasing the conversion rates. I mean, this is something which we all talk about all the time. And I guess we all have our own aspects on how to increase the conversion rates and what does it, what affects the increase in the conversion rates. But let's start from the very beginning and saying it comes to the situation where I have actually built my internet shop. I was very proud of it, invested a lot of time, and then I make no sales. And that's very frustrating, especially when you see that there is another guy next block who's actually having more or less everything the same as I do, but he's actually making sales. So what is the difference between me and him? And we are also going to refer, I'm also going to refer to what Damir said. It's, you know, he made it look so easy. The whole thing about internet shopping is it has to be easy for everybody. Okay, there is more to it. First of all, it's important to understand that it's not just shopping cart abandonment, but also a checkout abandonment. These are the 2 maybe milestones during the shopping experience, where the shopping cart abandonment means that I have actually started the process. Okay, I did pick up the product, I did add it to the shopping cart, and then I didn't even initiate the payment. So, second, very important element is where I did initiate the payment, but I never finished it, especially not finished it successfully. Now, whereby for the first topic, the shopping cart abandonments, now we're going to have like thousands of theories, and we can actually stay here all night. The good news about it is that nowadays you have programs, some of them even free, where you can actually manage your shopping cart abandonments, and it will allow you to, somebody mentioned it earlier, allow you to build your very important landing page in a way that as soon as I reach, as a customer, reach the website, it will recognize at least some part of my needs, and it will present to me the products which I might actually require. Very basic stuff. It has to show the perfect and the relevant images, the relevant data, not just go and copy copy some text from the brochure, paste it. You know, okay, you have a lot of text, but doesn't make anything. So also great thing about these shopping cart programs is that they're going to allow you to do some kind of communication with your customer, to try to stop them for leaving the shopping cart experience, but also shopping experience, but also to contact them later, to bring them back to your shop. Because don't forget, at that moment you know that there is a person who actually likes your product and they want to buy it from you. The second and very important element is also this checkout experience. What brings you to the stage that you are actually having a customer who is willing to go for your product, they are willing to pay for your product, they initiate the payment and they don't finish. The numbers, the percentages of those people are very high. So there are many reasons for it. And again, we can talk about them, but very important milestones which we never should forget. And that is, again, you have to make it as simple as possible. Don't complicate it. You know, don't ask basic stuff. Don't ask for the fields to be filled in if they are really not necessary for the payment to be done. You want to ask a question, ask them after. You know, take their money and then ask. So you should always think about that. Don't ask another, you know, on the mobile experience is even more fragile, but you know, you don't need 5 pages to reach the payment. If they want to pay, give them the highway. You know, collect the data on your page, collect the payment, and then do the rest. Mobile is exactly even more important. So there are many, and I'm just worrying about my timing, so there are many reasons why this can go wrong. This is not something which you're going to, with all expertise that you can get, with all the programs that you can find, you're going to fix a majority of your problems. And then again, you have to continue doing it. It's not like you're going to fix it and you can go sleep. No, you can't. Because if you want to be like the guy next block, you have to keep working it all time and try to be as transparent, as good in communication with your customer, because again, if they don't feel it like their own, they're not going to buy it.
And Damir, just if you can just build quickly on this because of the stats we're telling, because numbers never lie, correct? So that's something that we all learned, correct, in all our ventures. Is it, because you mentioned, sometimes you come to the end and then your preferred payment method is not there, or you're being asked to fill in too many fields and obviously you're tired of doing it so many times, or suddenly a KYC process has been introduced that you're not aware of and then you don't trust or you're not really comfortable with. Now, is there an issue with all these marketplaces or commerce sites not knowing their customer or not discussing or not having focus groups with them before to actually understand what is the experience that will get them across the line in the first place? Because when you have 46% abandonment, when you have or in emerging markets, if you have situations where people are going through a shopping process and then they remember they actually don't have enough money in a mobile space or somewhere else, and then obviously they leave. Is there some of that that's also happening that maybe we are not addressing from a customer side at the very beginning versus leaving it for later?
I think one of the main issues last year was we saw in our statistic, right, that 36% of all the abandonments last year was also due to the authentication process, what Gabriel just mentioned, right? So it's basically why did not we make it possible that the end customers know what to do and what is the process? So basically thinking about that reason, right, is the first place. Second place was what we also saw in our statistics, that the point of not enabling really like this remember me functionality, right? Like
Amazon does.
Correct. So basically, come on, we are all working with tokenizations in the background, right? So why not using it? And on the other hand, you have also the possibility to work with cookies, right? Correct, so maybe some tech guys will understand it, right? But where are we? So why don't we enable that? And I think also what one of the major topics is, and I just had it in the mind, is when I go and I think this fantastic guy this morning, Luca, I think it was, he said he was talking about Apple, right? So if I buy myself an iPhone, of course I want an iPod, of course I want an iPad, I want a Mac, and so on. So I am a returning customer, and I am willing to leave you the money, but you're not enabling it. Yeah.
It's very interesting because I was mentioning Amazon because if we have not learned from their book yet, I'm really amazed still, because I don't know how many of you have tried to buy the same thing twice from Amazon. Has anybody tried to buy the same thing 2 times? What does Amazon do? If you try to buy a book that you already purchased before, Amazon will actually stop you and say, sorry, you already bought this book. Do you really want to buy this again? So this is a company that can just easily take your money and walk away, correct? And say, who cares? You forgot you're buying the same book. No, Amazon actually does this in a different way. And I also like the experiences that some of the banks have implemented as you return to their ATM machines. They remember that you most often draw 200 euros, so next time when you enter your ATM card into the bank ATM, the first thing that comes to your screen, 200 euros, no receipt. And that's one click away from the fantastic customer experience compared to everything else we have to do. So, but Nikola, you wanted to...
Yeah, I had a bit different experience recently with Amazon.
Did they take your money?
Almost, but what I did, I bought 5 items for a lot of money, let's say over 1,000 euros. And once I did it, in a matter of 5 minutes, I received through the platform offer if I want to buy more for 20% less price. So you
showed up for the first time on Amazon?
No. My account is
Just joking.
Very old one.
Okay, I want to shift a little bit into the payments jungle story, correct? And here, what I mean by payment jungle is we heard again through the statistics, which is great. It's a good set of talking points. Is that over time, different payment methods have started to emerge and started to, either convenient or disrupt the lives and obviously the way we consume these days. So the question really here is, which payment method is gonna win, correct? At the end, if there is gonna be a winner takes all, or how different this is in emerging markets versus mature markets, in underbanked markets versus bank markets, etc. So, is there something that we see coming up stronger than was maybe early expected? And yeah, either one of you can start. Both questions for Gabor and Gabriel.
As an acquirer, we are working with the merchants and actively follow up their requests. So when we identify a payment need, we actually see the similar opinion that you expressed, that the customer wants immediate payment, wants the quickest solution, and wants to accept specific cards and specific forms of payments. And regularly the biggest merchants wants to accept all kind of payments and don't want to choose, because it wants to cover everything, wants to reach all of the customers, and don't want to accept 2 or 3. They want several options. Recently we had some merchants who has very specific needs. For example, there is a tablet in the store and want to connect the payment method, but actually it wants to accept physical card as well. It's not enough only the payment solutions, because they have a customer group which available only bit cards, physical cards, not just in the phone, which was stored in the phone. So we met very diverse needs on the merchant sides, and we try to put up our knowledge of our devices and what is exactly fit to our merchant needs, but we meet every kind of payment need currently on the market. But of course, the physical EFT terminals, as like in my approach, is the cash on the market. There will be a very slight or even slighter segment of the market which is needed these type of physical solutions. For example, if we go to the physical shop, I don't think it would be able to exchange 100% the online version, but it will be reduced at a certain level. But this type of diversification of the payment solutions and even the market and even the solutions in the future, I think should be simplified somehow. So can be an interesting question to the audience. Maybe we can ask if you have a corporate or running a corporate business, or as a private person, what kind of payment solutions do you choose or you prefer, or you can trust on the bank card, or you transfer, or what type of payment
maybe wallets?
And there are a lot of solutions currently. Yeah. And maybe someone is not accepted at a certain place, someone is accepted, so maybe we are should prepare somehow 2 or 3 different kind of solutions.
I want to hear from Gabriel on this also. But before you do so, one of the reasons for calling a jungle, when I was preparing for the panel, is having lived 20 years in Asia, we were so excited that Asia was on the forefront of digital payments and disruption, and that we can finally go into a mall and replace 20 credit card terminals that were over there in a shopping center. And then you walk into a country that is over-regulated and does not allow a unified QR code. And at the end of the day, you walk into the shopping center and you see 20 QR codes all over the thing, which becomes a real nightmare and a jungle, and it actually looks worse than when the terminals were, correct? So with that, something, you know, somebody didn't think of how to regulate and what really to do and how to help the experience. So how does Mastercard work with its base, with its merchants, with governments, with regulators to maybe you know, get the jungle in order? All right, I asked for 2 microphones, but
there are 2. Yeah, I think there are different kinds of jungles, right? So the jungle that you were referring to is probably a bad one that will get you killed. But there's also a good type of jungle that you actually enjoy being in, right? So I think the good type of jungle is here to stay. The bad one will go because it cannot be scalable, so it will not make sense for whoever builds that jungle to sustain it. But the good type of jungle, I think, is here to stay because consumers want options. And their options are not, how should I say, they're not single option. They're multiple option. I might be happy to pay with PayPal on some merchants, with Amazon's card and file with some other merchants. I might be willing to pay with my Apple Pay with some merchants, and so on and so forth. So I don't believe consumers are single-minded when it comes to their payment options. This adds complexities to the ecosystems, and I think Nikola and Damir would know that they basically need to integrate a lot of payment options to make sure that the merchants get them, and the merchants need to get them in a very simplified way. So you can't ask a merchant to do X number of integrations. That's just not going to work. But you need to have them. So this complexity is, I think, the stage we are now. There are many payment methods appearing. I think there's a belief that the market is ripe for disruption. I have my doubts there, but I think there's a belief that the market is ripe for that. And you therefore get a lot of effervescence in terms of investing money into new payment methods. Most of them will fail because that's reality, but some of them will not, and that will be your jungle, right? So at this moment, I think this good jungle might look a little bit awkward. When it will get simplified, I don't know, but I still believe it will remain a sort of a jungle, clearly with a lot more payment methods than we got used to.
That's what I wanted to ask, maybe, yeah, that's what I wanted to ask Nikola and yourself also. Maybe just a comment on adding crypto into the jungle, and is it something that will help the cause? Is it something that is going to be only for a specific segment and maybe for a specific group of merchants and people, or something that will take off?
I don't think we should attempt to answer that, right? Because we're talking about consumer payments, there are billions of consumers out there. So I don't want to be the guy deciding what the consumers would like to use or not. I mean, if anything, I want to be ready to offer them whatever they want. Now, crypto is another type of jungle, right? And I think it can be very, very confusing today. If we're talking about the original crypto, so let's say the Bitcoin, I don't believe that's going to become a payment method. That's my own belief, and I think it's also what the company is thinking about. That's not going to become one. At this moment, that is an investment asset rather than a payment currency, and we don't see that going forward. It's also horribly inefficient. So the way it works now, it cannot continue. There are these stable coins, which basically they're just a bridge between the first crypto and the fiat. And I believe that long term, they're not going to become a payment method either, because their logic exists only to create this bridge. And then there's the central bank issued digital currencies, right? So that basically goes out of what we call crypto, and that's a very bad name by the way. Calling something that should be consumer-related crypto, it's a very, very bad name.
Okay, we call it a coin then.
But it's a digital currency, right? So you have your digital euro and your digital yuan or your digital US dollar. Now that I believe will become a payment method. There are clear efficiencies in doing that. There are a lot of risks associated with that. So I think the next few years will be spent by the central banks figuring out how they can manage those risks. Because you, on one hand, lose the risk of forging paper money, but you run into the risk of forging digital money. So which one is easier to...
But I believe also there's an element of education that needs to happen towards the end users, correct?
Oh, certainly.
You know, not everybody is at our level that obviously is in the industry and it's in the forefront of knowledge and everything, etc. If you want to go into the mass market, then maybe a role for aggregators and for people that are actually building companies on this becomes even more important. Maybe Nikola, you can give us your view a little bit on that.
Actually, I don't have anything to add on this. You've heard the expert, definitely. So, but I can provide my own experience as a cryptocurrency user. And actually, yeah, so I was a victim of ransomware attack recently. And I had to get in touch with people who are working with crypto a lot. And the guy told me, do you know that 90% of my clients are coming to me to buy crypto in order to pay ransomware? So I believe that crypto will find, you know, certain verticals. It will hit certain segments. But I must agree with Gabriel, as it looks right now, it doesn't look scalable.
Fair enough. Damir, maybe we move into the topic of buy now, pay later, and probably also we can address this also to Nemanja. It is a concept that kind of, I would say, it was kind of evolved in this region here, and it kind of was close to this region, but then it kind of get copied across the world, and obviously evolved in something else depending on the maturity of the market and the systems behind it. Is it something here to stay? Is it something that works well? Do you see that innovation behind that concept? Because it's not something it's traditionally existing, not just in digital, correct? So we used to have this when I owe you and then I'll pay you back, correct? So, but now in digital world, things are a little bit different, and maybe a little bit trust becomes another currency. So, what's your view on that?
Is it here to stay? I cannot say, but I know that nowadays everybody's talking about BNPL. And in preparation for this conversation, I will share is that we were thinking about how to tackle this issue, because we cannot ignore it, especially in the whole Western Europe. Everybody's talking about BNPLs. It is something which is very familiar to this region, because for us, paying in installments due to various reasons, paying in installments by checks, by cards, is something which is a normal thing for this region. Now, what is happening elsewhere now is that becomes another payment method, which is now in this list on the checkout page, which you have to involve the cards, the Klarnas, the different methods, including BNPLs. And the recent data that I read was that as regards to BNPL, it is expected that until 2025, there will be between $600 billion and $1 trillion processed in BNPL systems. Another very important issue here is that why this whole thing about BNPL happened. Well, it's a generation thing. The new generations are willing to purchase things which actually they might not have, or they might not ready to pay immediately, but they will pay it later. There is a need. And the merchants and the providers have responded with a system which is allowing them to pay later. Now, again, we can talk about credit cards and say, okay, the credit card is another way of paying later, but then that's the difference is that that's a relationship between the customer and his bank. Here in the modern BNPL systems, we are talking about the relationship between the customer and his merchant. So the merchant is actually giving a loan to people who are ready to buy the products. And another very important thing is to say that these are not cheap systems. I mean, for a typical merchant to process a credit card or debit card, whatever, it will cost them like 2–3% commission. For BNPL, they might actually pay 5–6%. So why are they paying? I mean, we all know that as a merchant or as a users, we are always complaining about how high is the commission. Now, suddenly we are ready to pay this much money. Why do we do that? Well, simply, the market is requiring it. I mean, you want to be the merchants who's actually giving the product that the customer wants. You want to have the loyal, the repeating customers, and you are providing them what they want. The new generation who's actually evolving and coming here is the one that needs this kind of payment method, and I cannot say how it's going to be implemented in this region because of these specifics that we kind of lived through it already, but I must say that I do believe, unlike for crypto, I agree with you, for BNPL, I'm sure that they are here and they're going to stay here for a long time.
And Damir, you actually have some examples from the regions that you cover that you wanted to bring in.
Correct, and I think, who knows the Inditex group? Me. Everyone, okay. If someone doesn't know it, like Zara belongs to them. And our daughter company is RatePay in Germany, right? And they're offering like payment on invoice and installments. And I think I love the word buy now, pay later. It's like so fancy and everyone is talking about it. And it's like, wow, it's like unified commerce like some years ago, right? And omnichannel. So when we are talking about buy now, pay later, I think there are two differentiators. We have payment on invoice and we have installments, right? So what is going on and how we won Zara and how we won the Inditex group is by basically, again, the topic of convenience. The customer today, they want to order fashion home, they want to put it on, see if it fits, right? I gained 15 kilos during the COVID time. So if I order something or a new jacket, right, I need to be sure it fits. So if it doesn't fit, I have to send it back. And this is basically why the end customer chooses to pay by invoice, because it gives him a convenient way of purchasing things and sending things back. And I think this is why, at the end of the day, this payment method is super, super good and also convenient for the end customer. And we saw during last year, especially in the retail segment, where we are really strong with our RatePay company, is that a lot of, like, the purchases increased by 28%. And it's like a third of a €1 million company. So you just have to think of that in volumes, and I think this is a payment method that definitely will increase. And one topic to the crypto topic, I really like it because, you know, like we Austrians are a little bit crazy, and we want to try new things out. And what we invented is 1 year ago with Concardis, like also our daughter company where I'm the country director, we invented crypto payments via the POS terminal. And we started doing that. And at the beginning, it was like, okay, everyone wanted to have it, right? So we had it in taxis and in hotels and so on. And we saw, no, it's not running. Transaction volume is not running. It's not something people use. But there are certain segments like automobile industry, like high luxury brands and so on. And this is running. So the question is really, and I'm totally with you, like it's not something that's for the mainstream, but in this payment jungle, I'm sure we will create even a more jungle, right, with using this kind of topics. But if we really focus on the right industries and give the customer the convenience behind it, I'm sure this will also be, for some industries, the breaker.
And I think I'll take this opportunity to maybe to actually share one experience from Asia regarding not buy now, pay later, but actually how innovative companies used credit scoring to overcome the situation, especially in emerging countries and emerging markets where in mobile commerce it's prepaid, obviously 85% of the world is on prepaid. And when the entertainment is consumed, games or video on demand or music, what happens is that right in the middle of consuming YouTube on a backseat of a taxi in Indonesia, you're stuck in traffic, you're watching your movie or you're catching up on some news or sports, and suddenly you get stopped. You can't watch anymore because you ran out of credit on your card, on your mobile card. Clever companies started to recognize comeback users and extend them credits to finish the experience that they just started, because they know that I've been on the same mobile number last 11 years. I will definitely top up and they will collect from me later. And it actually looks like that YouTube has recognized me, or that the gaming company has they don't know who is giving you the money. Correct? So new companies have been built that actually want to take these micro loans on their balance sheet in order to start to become an intermediary between a consumer and somebody else, because a telco wouldn't do it, banks will not score me for micro spending, etc. So it's an interesting concept evolving in some of the emerging markets, and it goes along the line of this concept that is working well in a mature market. So maybe with this, it's time to invite some questions from the audience. I think we've spoken quite a bit. We have another topic to wrap up, but I just want to be fair and maybe take a question or two from the audience. You guys been patiently listening to what we have to say and what we think, but we're not the smartest. So can somebody maybe raise a question? I'm not shy to actually call people that I know, especially in the front row, and to ask a couple of questions. But before I do that, okay, row 2.
Okay, thank you. It's really insightful. I realize there are people on the other side. I take myself courses, and I realize I don't have to experiment. I can rely on your data. I think that's like an easy way. And really, what I'm concerned with, what's the mind hack of consumers? Is it better to offer like lump sum or monthly recurring payment stuff like that? Do you track that as well? Also, Damir, I would like to know the education business. Is there also live in e-commerce, or you just like to refer to merchandise? Because am I empowered still about the education side? Some of those services like education, what's better? Lump sum or like every month they pay a fee? Like what's better to offer? Does it make sense?
Maybe I can take it on.
Yeah, very good.
Super good question, an interesting question. We have one part in our reports about subscriptions, right, and subscription models. And I think subscription is something that developed and got strong in the past years, definitely, right? So basically, when we say, or look even to the US, right, there is like Paytrail, right, where you have subscription models in behind and so on. And the money flow is definitely something what's in there. The question is always what you have to distinguish: what do I offer, and how flexible I want to be, like with the final customer at the end. So if you know your target group, right, and you say, okay, the convenience with the end customer is that he pays, I don't know, 10 euros a month or I don't know what, right? And you go over subscription and you can have your service and your earnings, that's fine, right? But if you want to have the flexibility of having individual packages as well, offering, right, then better go for the flexible checkout. It depends on the business what you're doing, right? So basically that's what you have to decide for yourself. But you have enough experts in the market, right, who can really guide you through and say, okay, like for this business model, there are references where you can have, for example, a good subscription model. That's it. Try and error, right?
Any more? One more? No more? Okay, maybe we'll wrap up with the final topic or maybe statement, and maybe get Gabriel and Gabor to give us their view. the traditional banks obviously have been disrupted. We've been seeing this for quite some time now by new digital banks, by fintechs. And is there still a question of who is really adding more value, or did we just do better segmentation and addressing services to those that like the old habits, and we keep that in a specific set of offerings, and that's going through our traditional banking sector and maybe banks that have not stepped up yet, and then maybe segmented it to the new generation that are instant, that are probably more risk averse, etc. So maybe a final view on the disruption play that is happening, and do you actually see real value being now created and added by the way the sector has been disrupted?
No, this one is working, but if you want me to pick up this question,
yeah, everybody can, yeah.
Fine by that.
Yeah.
Yeah, thanks. Okay, so yeah, so that's quite a lengthy question, but what I can say is from a challenger bank or neobank perspective, comparing to the traditional banks, I can say that there is an advantage, and advantage lies in the fact that challenger banks are able to recognize new business model much faster and to adapt to these business models, especially in emerging global digital economy. So let me give you an example here. I don't know how many of you here knows that you can hire a person online who will teach you how to play a certain game.
Yep.
But there is even more to that. So you can even hire this person to complete some game to you, like to play some levels, on your behalf. And there is even more to that. You can hire a person to play online on your behalf. So one of those businesses, they went to the traditional bank and they described what they're doing, and you can only imagine the faces they got at the bank. And the only thing they could do is to find some challenger bank, some completely online bank who recognized that model, and now they are working with one of those platforms, and they're working really well. They have, I must say, amazing turnover. So until traditional banks are able to adapt that quickly, I would say that in these segments, so in this growing digital economy, neobanks have some advantage. There is also another space where neobanks have more advantage, and this is, let's say, a global market. So somehow traditional banks are more focused on local markets or sometimes even on the region. But if you have a business which is truly global, then I believe that neobanks, they have advantage in this domain. But it's not all milk and honey for neobanks. So they were able to make disruption in certain areas of financial services, but there is a big question of trust. So someone mentioned today that we are not dealing in payment industry with donuts, so we are dealing with money. So I'm quite certain that most of the people here will think twice if they will put money on some online platform that exists 2, 5, or 6 years, or they will go to the traditional banks with a history and tradition. But this is changing as well. We have also new generations that, they don't necessarily like the banks. I met one customer, he's really, really young, he's 18 years old. He never worked with the bank. He does not know about banks. He knows only about these online platforms, and that's amazing. I believe that synergy between traditional banks and neobanks is actually the winning formula. And if tradition, trust combines with the meeting of new business needs, once they merge, this is a winning combination. Yep.
I think this is a great, great wrap-up to the question also, and I think I know we are over time, but I don't care. I think it was great. It was great conversation and quite involving. So thank you guys very much for here, and big applause for everybody. Thank you. Well done.